Wir haben hier zum Gespräch Eric Franc. Er ist seit Mitte vorigen Jahres Geschäftsführer von DNCA Finance. Eric, since mid-2014 you are CEO of DNCA Finance. Before, you have been working with many other companies in the investment branch, mostly bigger companies like Banque Privée, 1818, Natixis, as well as AXA Group and Invesco. What was the reason to go to DNCA?
Well, the first reason is that for the first time I could be a small shareholder of the company for which I would be working. So it was, the first reason. The second reason is DNCA has become a big name in France on the asset management side. And the third reason is that there was a big challenge on the international sales, potential sales for DNCA in the next 2 or 3 years. So because of the three reasons, I decided to join DNCA.
15 years since the foundation of DNCA Finance, and now since mid-year last year, 15 billion euro in assets under management. Well known in France, but not yet among the first choice in Germany and other countries. What are your plans to change that?
We have a big market share in France. We also have a big market share in Italy. But it is true that in the other countries of Europe, we're really a small player. So we have to invest more in countries like Germany, where the potential is very, very big, but also the competition is very tough. So our plan for the next 2 or 3 years is to invest more in Germany, because the market is really a big open architecture market. But you really have to be in the country. You have to be in the country for a long time before you can really have success. We're planning to open also an office in Geneva this year and also an office in Madrid. And right now we have office in Luxembourg, in Belgium, in Italy and France, and Germany, of course.
A product like DNCA Invest Euros may be well known in Germany. The fund has about 4 billion euro under management. But last year the performance was somewhat lagging behind. What was the reason?
Well, the first reason is currency, because the product is invested only in Europe. So when you compare the product to other more global products, the performance was not as good as our competitor like Carmignac or other players. But if you look at the performance since the beginning of the year, the performance of euros, has been 2.85%. So, even though the performance last year was a little bit under the years before, because last year I think we had a performance of 4.25%, still a good performance, because if you look at the volatility of the product, if you compare the performance and the low volatility of the product, it's still a good performance. So, last year wasn't as good as the year before, but if we look at this 2015, it's starting pretty well.
Your company is looking back to a history full of changes, not only regarding its owners, but also the name, which has changed several times in the past years. What is the situation today regarding the ownership?
First, regarding the brand, it's really DNCA, which is going to be the brand for the next 10 or 15 years. There is no doubt about it. Concerning the ownership, in the history of DNCA, we had 3 different stories. The one from 2000 to 2006, where the entire share of the company belonged to the employees and the founders. And then from 2006 to 2011, we had a big shareholder, which was Banca Leonardo. And thanks to Banca Leonardo, we managed 4 billion coming from Italy. They gave us access to the Italian market. And since 2011, we had our main shareholder became a US private equity firm named TA Associates. We contracted the debt in 2011. We were supposed to pay back the debt in 2016, but because we've been very successful in the last 2 years, we should be able to pay back the debt in a few weeks. So now we're looking at what will be the next step for DNCA in the future, and what we would like to do is maybe find some industrial partnership to allow us to sell our product overseas, in other countries of Europe, or for example in the US or in Latin America. So it's going to be another step in DNCA story.
What role plays TA Associates in the question of ownership?
Well, they own 50% of the company. They have been a very, very good financial partner. They help us to organize the company better. They help us to develop the size of the company. But as many private equity firms, one day they will step out of DNCA. So maybe it will be this year, maybe it will be in 2 or 3 years. But right now we're looking at what could be the next step for TA, but more for DNCA and the employees of DNCA.
You just mentioned it, with a private equity owner there are always some rumors that we might have to expect in the near future. What can you uncover to our audience here at the Congress?
Well, the only thing I can say is that whatever happens in the future, the employees of DNCA will remain in DNCA because they are really the people being able to provide the performance, the salespeople being able to develop the business. So whatever happens, DNCA will remain DNCA, and our main challenges in the next 2 or 3 years is really to develop our sales outside of France, outside of Italy, and Germany is one of the largest countries in Europe. We would really like to do better in Germany. So we're going to invest more time, more money in Germany. We're going to open an office very soon in Frankfurt. We're going to hire some more people to work with the team. So this is going to be the challenge of DNCA in the next 2 or 3 years.
Sounds as if we will see you again next year here at the Congress. Thank you very much, Eric.
With great pleasure.
Thanks.
Thank you very much too. Thanks.